Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. As we all know, Elon Musk abandoned the Twitter deal and the stock is already suffering, and this may lead to continuation of the major downtrend. Let's check this on the chart. As usual, let us start with the major structure over the monthly chart. And here it will be very clear that there is a big problem for Twitter over the very long term. We see here that the 74 monthly resistance, the stock formed a double peak around that level. Then it again broke below another important, relatively important support around the $48 level. This level especially used to work as resistance long ago, maybe 2018, 2019. So it worked as resistance 2 times. And here it again started to work as resistance for the 3rd time. And it did not reverse the role as was expected. No support created. Instead, it broke below the 48 level and it worked as resistance for the 3rd time. So the major structure is bearish and it seems like the stock is heading down, falling freely towards $24, which is considered as the nearest monthly support. Let us check the long and medium term picture over the weekly chart. We can see clearly that the downtrend is well established, connecting lower highs over the weekly chart. And here is a single lower low. Of course, it did not form a lot of troughs along the way, but it just fell freely to the downside before forming this bottom. And here we are testing this very important level of support. So over the long term, we can say that there is a well-established downtrend, and I think in all well-established downtrends, it's expected to break any kind of support. That's why I think the stock will continue its fall towards the nearest monthly support, as we have previously said, around $24. And this very important support level, which is around 32, I think it will be broken to the downside, which is expected as a habit in a well-established downtrend over the long term, as we can see. Okay, let's check the short-term details over the daily chart. And here is a lot of details. First of all, the hype of Elon Musk asking for Twitter and making the Twitter deal has led the stock to rise significantly on a rising upward gap with very high increased volume. Of course, this was higher than normal volume, abnormal volumes, but when negotiations started, it was not looking good at all, and we can see here it gradually formed a peak, and this we can call technically a reversal island, because there is another opposite gap to the downside, and this area is looking like an island of prices separated on both sides from the general moves before or after the island. So this was a reversal pattern, not common, but it took place now, and it led also to the change of the upward corrective wave and changed the wave into a new impulsive wave to the downside. So this well-established new wave to the downside is considered impulsive wave moving in the same direction of the longer term trend, and it is going in the same direction of the prevailing downtrend from the weekly chart. So let's draw this impulsive wave like this, short-term downtrend forming the impulsive wave. And let us zoom out a little bit so that we can see the bigger picture, and things are very clear now. We can see that Twitter is performing way below the monthly resistance, and it formed a peak with high volatility around $48. This is the first bearish sign. The second one is a very well established downtrend over the weekly chart and a parallel channel line. This is confirming the bearish environment, the downtrend over the weekly chart. This is the second sign of negativity. Over the short term, we also do have impulsive wave to the downside with the same direction of the prevailing trend. This is the third negativity sign. And we can see a kind of continuation head and shoulders in the formation process. Here is the left shoulder. Here is the head, and here is the right shoulder. So the neckline is clearly running through $32. If this level is broke and confirmed the break by closing on daily basis below $32, I think the target will be the thickness of this pattern, which is the distance between the neckline and the top of the head, which is around $20. This is terrible because this makes the target of Twitter after a confirmed break below 32, it makes it astonishing, surprising $12 target over the medium and the long term. So keep in mind, if $32 is broke and the break is confirmed by at least 2 or 3 days, a week will be better. This means that the continuation head and shoulders is completed with an approximate target $20 to the downside, which meets the $12 mark. This is terrifying a little bit for all those who are having long positions, for all buyers. So keep in mind, the most important level on Twitter for the time being is 32. We will all pray that this level will not be broken to the downside, and if it did, things will go quickly, and I think in a strong impulsive wave, as it is the case now, towards $12. And if it did so, I think it will be a good chance to make a virtual trade on the short selling side with the targets around the $12. We see here also that the target, which is $12, is around another monthly support area ranging from $13, maybe $14 down to $12, maybe 11.5, maybe $11. So this area may work as the target area after the head and shoulders is completed, if the neckline is broke to the downside and if the break was confirmed and valid. Otherwise, the stock is also in bearish environment, even if the neckline is not broken, as long as it is below the downtrend from the weekly chart. So everything on Twitter looks bearish. A lot of negativity is on the way. A terrifying target to the south towards $12 if the neckline is broken and if the continuation pattern is confirmed. So a lot of factors are leading us to a virtual trade on the selling side, and things do not look positive even if the neckline is not broken. So when can we have some kind of bullishness in Twitter? I don't think over the medium term there will be, even if a correction took place, and as long as the downtrend from the weekly is valid, things are considered only corrections, short-term corrections to the upside, maybe sideways, until this trend line is broken. Otherwise, things will remain bearish, things will remain negative. Thanks for watching. Please feel free to like, share, and subscribe, and see you soon.